Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you 3 leaps that I will be adding to my portfolio over the next couple of weeks. Now, the reason I decided to add these 3 leaps to my portfolio is because, as you know, we are experiencing all-time highs right now, but there is still deep value that can be found in the market. All you need to do is just look. Now, I'm going to show you how these 3 leaps options are going to work even if you're trading with a small account. So, if you are new to options or you're trying to use options to make an additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be covering 3 leaps option that I will add to my portfolio over the next couple of weeks. I'm going to be giving you a step-by-step walkthrough of how I'm going to go ahead and purchase these leaps option, and I'm going to also show you my criteria that has decided me to go ahead and add these leaps to my portfolio. A couple of them I already do have in my portfolio. Now you guys know how we do it. We like to go ahead and get down and dirty with options. So the first stock we're going to entertain today is going to be none other than KVUE, and that ticker is going to be KVUE. Now, let's go ahead and go to the advanced feature in order for us to check out the chart. We're going to go over to the 1-year outlook in order for you guys to see the chart. Now, most of you guys that have been following this channel, you guys know this is my favorite chart setup before I get into these leaps option. The reason why it's my favorite chart option is because the current share price is trading below the 200-day moving average. Once I see that, I know right off the bat there's some value somewhere there to be had. After all, if the share price is lower than the 200-day moving average, that means it has gone down. So sooner or later, it's going to come up. Now, if we go down further to the RSI, you could see that the RSI is trading around 40 RSI, which is good as well. The reason that is good because I like also RSI of 50 and below. That means any RSI 50 and below, which is going towards the 30 RSI, tells you that that stock is going into oversold territory. So hence, I really like these setups right here. Now, the current share price of KVUE is $18.60, and the 200-day moving average is around $22. Now, let's go back into the stock in order for me to give you a walkthrough of what made me decide to go ahead and add this to my portfolio. So we're going to go ahead now and we're going to scroll down. And as you can see, I already have one option strategy already queued up to be executed. So here's the major thing that put this stock in my radar. In addition to it being oversold, this company houses brands like Aveeno, Band-Aid, Johnson, Listerine, Neutrogena, and most importantly, Tylenol. I am pretty sure every single person watching this video today knows at least one of these brands right here. Aveeno is really big for baby products. Unless we stop making babies, I don't think they're going to be not ever going to be no demand for Aveeno. Band-Aid. Band-Aid is something we use every single day when we get injured. I don't see us never needing Band-Aid again, and the list goes on. If we were to go down and go a bit further, one of the other things that's going to make me get this stock in my portfolio is going to be the dividend yield. The dividend yield is 4.48%. Now, when you're doing LEAPS option, you do not benefit from the dividend yield. So what you guys need to do, if you haven't already, go ahead and subscribe to the channel. On my live video coming this Wednesday, I'm going to show you all the strategies I will be doing with KVUE, and I will be giving you a step-by-step walkthrough and analysis of why, how I intend to use this stock to make consistent income. Now, the 52-week low is at 17.15, which is very close to the current share price of $18.60. However, the 52-week high is $25.17, telling you that there's way more upside to this stock than there is downside. Now let's go ahead and go to trade KVUE options to the bottom in order for us to open up our options chain. Now, before I go ahead and get into this option strategy, I need you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. The second favor you need to do yourself, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, then at least you know how to get out of the trade. Now, let's go ahead and I'm going to go to buy. I'm going to go to call. And I'm going to go ahead and choose my expiration date. The expiration date is the most important criteria when doing this option strategy, which is the LEAPS option. For those of you new to options, LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. It's very long, so hence we just use the acronym LEAPS. Now, I'm going to go ahead and choose my expiration date. For this one, I'm going to go all the way out to January 21st, 2028. That's going to give me 852 days to expiration. The reason I'm going to be going that far out is because I want more than enough time in order for my thesis to work in my favor. And I'm going to show you another reason why I decided to go all that way out. Now I'm going to go ahead and I'm going to choose my strike price for this option strategy. The strike price I will be going with is going to be the $13 strike price right here. Now, the $13 strike price right here, this stock has never seen the $13 strike price. The lowest price it's ever been to is, I think, $17. So with this strike price, I'm pretty much trying to secure myself in order for this trade to go against me. The other reason why I decided to go for such a long dated expiration date is because although I go all the way out, I'm only going to be paying $655. Now, for those of you who don't know, the further out you go with your expiration date, the more costly the options do become. So although I give myself 852 days, I only going to end up paying around $6.55. So in my book, according to my risk tolerance, I think that is well worth it. Let's go ahead. We're going to click that. So this LEAPS option is going to give me 852 days to expiration. It's going to cost me $655. This is going to work perfect if you're trading with a small account portfolio. My portfolio could definitely afford this, and I do not have to even keep watching this stock. It's just going to be a minute part of my options portfolio. So this is the first LEAPS option that I'm going to pick up. Now, for those of you not familiar with this stock, after doing your own due diligence, you could go ahead and if you do choose to pick up the $15 strike price, the $10 strike price, they're all very good strike prices. So that's it right there. Now we're going to go ahead and get into the second stock that I will be adding to my portfolio via a LEAPS option strategy for the next couple of weeks. Before we go ahead and get into that, if you guys have not yet, this would be the second best opportunity for you to go ahead, like the video, subscribe to the channel. Now, let's go ahead to the second stock. The second stock on my list is going to be none other than TTD, and that's going to be the trade desk. Now, for those of you that are not new to the channel, you guys have known that I have featured this stock several times. I've made lots of money with this stock. However, currently this stock is trading at a ridiculous value. So we're going to go to the 1 year chart. And once again, you're going to see that chart that I favor so much. Currently, at the price of $44.50, Trade Desk is trading way below its 200-day moving average of around $78, $79. So that tells me right there, once again, there is way more upside than there is downside. Now, there is a strong possibility that the Trade Desk keeps going down. No one could predict the market. What I am doing by favoring these setups is that I'm giving myself enough leeway in order for the trade to work in my favor. Now, once again, we're going to go down and go to the RSI. The RSI is very favorable as well. It's around 37. A 37 RSI is absolutely a buy whenever it comes to a good stock. Please note, if you have a crappy stock and it has a 37 RSI, it does not mean that's good. Always make sure you have a good thesis on the stock that you want to trade and you did your own due diligence and you decide that is the stock you want to get into. Now let's go ahead back to TTD and I'm going to show you a couple more things before I go ahead and show you what LEAPS options I will be picking up. Now let's go ahead and we're going to scroll down. And what I want to bring to your attention is the 52-week low. The 52-week low is $42.96, which is super close to the current share price right now of $44.50. However, the 52-week high is $141.53. So there's a very big discrepancy between the 52-week high and the 52-week low. Now, Because the 52-week is so low, I'm not even looking for the stock to go back to this price. Any small movement, let's just say my exit strategy, because I always tell you guys, always make sure you have an exit strategy to go before you get into any option. So my exit strategy, even before I get into this LEAPS option, I'm waiting for this to go to $50. Once it gets to $50, then I will consider strongly getting out of it based on what the stock market is showing at that time. There's other criteria that are involved. Now, let's go ahead to trade TTD options to the bottom to open up the options chain. Now we have the options chain open. Now we're going to be going to buy. We're going to be going to call once again, and I'll be going to my expiration date. The expiration date I'll be going with is going to be all the way out. I'm going to be going with January 15th, 2027, which gives me 481 days to expiration. The reason why I'm going with this 481 days to expiration as opposed to the previous one, which is KVUE, is because the trade desk has a more established reputation than KVUE. So I have a lot more confidence in this one than I do the first one. And remember, stay for the last one. The last one is very risky, I guarantee you, but the reward would be insane if the trade goes our way. So once again, I'm going to go ahead. I'm going to choose my strike price below the current share price. The ideal strike price that I came up with after doing my own research is going to be the $40 price right here. With the $40 price right here, I'm going to have to pay $15.95, which in the real world is going to equal to $1,595. Let's go ahead. We're going to select that. So with this second LEAPS option that I do intend to add to my portfolio, I'm going to be choosing an expiration date of 481 days. I'll choose the strike price of the $40 strike price, and the amount I'm going to have to pay is going to be $1,595, which I don't think is a lot based on the amount of time that I have given myself in order for the stock to at least recover a minimum of around 10%. So there you have it, investors and future investors. This is the second LEAPS option that I will be adding to my portfolio in the next couple of weeks. Now we're going to go ahead and we're going to go to the last LEAPS option I will be adding to my portfolio. And that stock is going to be none other than OSCR Health, or OSCR. Now, like the previous two, we're going to go ahead and go to the advanced feature. Now, with the advanced feature, what you're going to see, let's go to the 1 year chart first so I can show you guys. This does not look like the setup that I favor. However, I'm going to show you how I'm going to get around this right here. So this one, the current share price is $18.97, and that share price is way above the 200-day moving average. The 200-day moving average is around $15. Now, I'm going to go down a bit lower and draw a trend line right here in order for them to get a very strong support. Now, that very strong support is around $12.98 or $13. Now, the reason why this is a very strong support, in case you guys do not know or you are new to options, is that this graph here has to touch this trend line multiple times, a minimum of 3 times. So you could see just on this side, it's touched 1, 2, 3, 4, 5, 6 times. So that right there shows it has a very, very strong support at the $13 price. Remember that price. Now, the RSI. The RSI is trading just above the 50 RSI, around the 52-ish, 53-ish RSI, which that is definitely workable according to my own risk tolerance. Now let's go ahead back to OSCR, and I'm going to walk you through the LEAPS option I will be picking up. So we're going to go now to trade OSCR options down to the bottom and open up the options chain once again. Now for this one, we're going to be doing buy, call, because remember, this is LEAPS option. It's always a buy call. And now I'm going to be choosing my expiration date. The expiration date I'll be choosing is going to be January 21st, once again, 2028, which gives me 852 days to expiration. The reason I'm going to be choosing that expiration date is twofold. The first reason is that I have way lots of time in order for this trade to work in my favor, in order for my thesis to be correct. The other reason I'm going to show you right now, and that's going to include the price I'm going to have to pay for this LEAPS option. So let's go ahead and go below the share price. Now, I did just show you the strong support is at the $13 level. So that will be the basis of my strike price. So we have it right here, the $13 price. Now, with the $13 price, I'm going to have to pay $11.40, which in the real world is going to work out to be $1,140. So here lieth the second reason why I went all the way out to 2028. With 852 days, and I'm only paying $1,140. I mean, in my book and my restaurants, that's a steal. Once again, this is the LEAPS option strategy. So I'm going to give you a quick roundup. With OSCR Health, although the current share price is trading above the 200 moving average, it is not my favorable setup. However, when purchasing my LEAPS option, I'm going to find a way around that. The way I found around that is I still went ahead and go below the 200-day moving average, below the current share price. I looked for the strong support. The strong support is at the $13 level, and that's the basis for me picking up my LEAPS. The $13 strike price is only going to cost me $1,140. Now, I keep saying only because if you guys are trading with a small account portfolio, I mean, anything under $10,000, this is still going to be a very small part of your portfolio. So there you have it. These are the three LEAPS options that I'm going to be adding to my portfolio come the next couple of weeks. The first one is going to be KVUE, which carries the second least risk. The next one I'm going to be adding is going to be Trade Desk, which I think carries the least of risk in all three of these stocks. And the third and final LEAPS option I will be adding is going to be OSCR Health, and this is the riskiest. Now, the reason why OSCR Health is the riskiest is because come end of 2025, OSCR Health may not have the subsidies that the government is currently providing them right now in the healthcare sector. It may be renewed, it may not be renewed, but we don't know. That's what's going to happen in the future. Now, the reason I'm basing this LEAPS option off is what I know right now, and here are the facts. The facts is OSCR Health is one of the smallest in the healthcare insurance sector. OSCR Health, although it's been around only a couple of years, has managed to steal market share from huge conglomerates such as United Health, Elevance Health. Hence, I believe in this company, and it's a very strong risk that I'm willing to take. So there you have it, investors and future investors, the three LEAPS I will be picking up. If you guys have not already, now would be the third best time for you to go ahead, like the video, subscribe to the channel. Here's the most important thing though. I do produce all this free content out there in order for me to help as many people start getting income from trading options. Now, if there's anyone you know out there struggling to grow a small account portfolio and you guys think this content could help them, then the right thing to do is to go ahead and share this video with them. Lastly, make sure to go ahead and subscribe to the channel. You do not want to miss my live trading coming this Wednesday, and the stock I'm going to be featuring is going to be KVUE. I'll give you all the option strategies I will be doing using that particular stock. Now, until the next video, keep pushing your investments.